Hey guys, today we're going to talk about the impact of mortgage rates on housing prices. My name is Rudy, and that's Larry, and we're Leave the Key Homebuyers. Okay, so a little background story about my life. I was heading to Florida to buy a property, and I think I'm a little embarrassed because Larry was telling me not to go. And well, we got there. We found a home we loved. We were going to get it built. It was going to be a new home, and qualified for the loan. But then I realized how much I'm going to have to pay a month, and I qualified, so I was okay with. I just wasn't okay with paying that much a month,
Right.
so we backed out. We just completely backed out.
When did you go to Florida prior to this visit?
We went 8 months ago.
8 months ago. That was about the very bottom of the interest rate market. And now you're going at the current top of the market. And it was a real rude awakening for you.
Very, very rude.
Very
They
rude.
they basically slapped me in the face. Is what they did.
Yes, yes. I knew you'd be upset when you saw the numbers. I told you not to go. And I'm concerned with housing prices in Florida much more than in New York. But that's a whole nother story. That's a video for another day. But let's talk about your experience. But let's put numbers
Yeah.
to it. They say
Okay.
you shouldn't
Let's
do videos with, was it children, animals, and numbers. Children and animals are unpredictable and numbers are boring. But we have to put some numbers in this video, something we really generally don't do. But I'm going to keep them brief. If you went to buy a house in July, an average house on Long Island's about $600,000. If you put down 20% on a house in July, your mortgage payment would have been $1,950. If you now, in late February 2023, if you were now buying that same house for $600,000 with 20% down, your mortgage payment is $3,300, up from 1950. That's a
Yep.
50% more. It's about, I suppose, a 60 or some percent increase. That's huge. And that's exactly what happened to you. And your
Yeah.
conclusion, Rudy, was not to buy, right? And that's
Not to
what's
buy.
not to buy.
Not to
So,
buy.
and not to, so now I ran one more number, just again, keep these numbers brief. And that is, how
Okay.
much house can you afford at $1,950? That same number that got you a $600,000 house before gets you a
Mm-hmm.
$350,000 house. So if I was going, you were able to
Wow.
afford a house in July, and you were still able to
Mm-hmm.
afford a house in February. You just chose not to. But if you were in July, you could afford a house because you had 1950, and now you went back to buy another house. It wasn't even an option anymore. That $600,000 house, suddenly you're looking at a whole different neighborhood, a whole different size house, and so on. So you have 350,000 to spend instead of 600.
Exactly.
Real, as you said, you were slapped in the face. So what does this mean? Housing prices in New York, downstate New York, have come down about 3%. Very small amount. Well, that's also, they stopped going up and they came down about 3%. They're going to, I believe they're going to continue to come down. Take that for what it's worth. I believe they're going to continue to come down as the people who have the $3,300 to spend get wiped out. And the people with the 1950, they're the only ones left. They can't afford the $600,000 house. Therefore, they're going to have to buy the $350,000 house. And I think that's going to cause housing prices to fall further. I don't think we're going to get decimated in New York like in Arizona, but I can see a high single digit decline where 3% I can see going to 8-10% maybe as top. That's my guess. But it's just that simple. It's just the function of affordability, nothing more complicated than that. So, sort of a
Yeah.
conclusion, if you're a homeowner, what does this mean to you? If you're looking to sell your house, don't look at what houses sold for in July, because that's not really a fair assessment, because those people are buying it and paying 1950, not 3,300. So
Exactly.
take the July prices with a grain of salt and know that your prices have to be adjusted. Whether you're selling a house to us, we make our living buying houses, or whether you're selling the house conventionally on the open market, you have to be aware of what is affordable for your buyer. It's that simple. Housing prices are not today what they were a few months ago, and they're not going to be tomorrow what they are today. There's still a little bit more mortgage increase left in this market, and we're going to continue to see it for the next number of months. And then I don't think it's going down after that. I think it's here to stay for a while.
Yeah. Yeah. I 100% agree. I feel like you are spot on that those numbers are a great example of what happened to me.
Yeah.
So if you guys found this information useful, please reach out to us. We'll be able to explain more about how we're able to buy your property if you'd like to sell as is. We'll see you on the next video. Thanks, guys.